You've been watching the AI boom from the sidelines. Nvidia gets all the headlines, AMD gets the hype, but there's a $180 billion semiconductor giant that billionaires keep quietly accumulating, and most retail investors have never heard of it. What you think you know about the AI chip war isn't wrong, it's just catastrophically incomplete. I've spent years tracking what the smart money actually does, not what they say in interviews. And here's what I found: while everyone obsesses over AI chip makers, the real money is flowing into the infrastructure layer. Broadcom isn't just another semiconductor company, they're the plumbing behind the AI revolution. When data centers need to connect hundreds of GPUs at lightning speed, they use Broadcom's networking chips. When your iPhone processes AI tasks, it runs through Broadcom components. The stock just rallied 8% in a single week, hitting $420, and the timing isn't coincidence. But that's not even the most interesting part. Here's my read on why this stock keeps attracting legendary investors. Ray Dalio holds it. Stanley Druckenmiller holds it. Even Cathie Wood, who usually chases pure-play AI stocks, has a position. The thesis is simple but powerful: every AI breakthrough creates exponentially more demand for Broadcom's infrastructure. ChatGPT doesn't just need GPUs, it needs Broadcom's networking chips to connect those GPUs. Autonomous cars don't just need processors, they need Broadcom's wireless chips for 5G connectivity. The company sits at the intersection of every major tech trend, collecting tolls on the digital economy. What I'm watching is how they're positioning for the next wave. The recent rally pushed Broadcom up 13% in just 1 month, but here's what most people miss about the technicals. The RSI sits at 62.57, approaching overbought territory but not extreme. This suggests the stock could pause before the next leg higher. Our AI signal shows neutral with medium confidence, with a near-term target of $424. Translation: the momentum is strong, but smart money might wait for a pullback before adding more. The 52-week range tells the real story though, we're still 15% below the highs at $495. The question isn't whether Broadcom will reach new highs, it's when. But there's a second pattern here that nobody expects. I always look at both sides, and here are the risks that keep me honest. First, Broadcom trades at premium valuations because everyone knows the AI story. If growth disappoints, the multiple compression could be brutal. Second, they're heavily exposed to enterprise spending, which gets cut first in any recession. Third, the semiconductor cycle is notoriously boom-bust: what goes up fast can come down faster. The biggest risk though? Concentration. A few massive customers drive most of their revenue. If Apple or Google decides to build their own chips instead of buying from Broadcom, the stock would crater overnight. Smart investors hedge against this, but retail often doesn't. That's where the upcoming catalyst becomes critical. Here's what separates the professionals from everyone else: they don't just buy and hope. Take someone like Stanley Druckenmiller. He's made billions by understanding that great companies can still be terrible investments at the wrong price. The fact that he holds Broadcom tells me the risk-reward still favors the bulls, even after the recent rally. Cathie Wood's position is interesting too. She usually avoids boring infrastructure plays, but Broadcom's AI exposure changed her mind. George Soros and Dan Loeb round out the billionaire club, and these aren't momentum chasers. They see something in the long-term fundamentals that retail hasn't caught onto yet. What they're really betting on is the next catalyst. The upcoming memory conference could be the catalyst that breaks Broadcom out of its current range, but the timing is uncertain. Here's why it matters: memory and networking are joined at the hip in AI infrastructure. When companies announce bigger, faster AI models, they need exponentially more memory bandwidth, and that's Broadcom's specialty. The sector rotation into semiconductors is already happening, as evidenced by last week's 8% rally. What I'm watching for is whether this conference triggers the next wave of enterprise AI spending commitments. If it does, Broadcom could test those $495 highs faster than anyone expects. But even if it doesn't, the underlying trends remain intact. The real question is what this means for your portfolio. Here's my take on where we stand. The bull case is intact, AI infrastructure demand isn't going anywhere, and Broadcom sits in the perfect spot to benefit. The smart money accumulation gives me confidence in the long-term story. But the near-term technicals suggest patience might be rewarded with better entry points. This isn't financial advice, but if I were analyzing this for a portfolio, I'd want to see either a pullback to the $380–400 range for a better risk-reward, or a clean breakout above $450 to confirm the next leg higher. The key is having a plan either way, not just hoping for the best. Remember, this is educational analysis, not financial advice. Every investment carries risk, and you should always do your own research before making any decisions. For the complete data set, technical analysis, and real-time updates on what the smart money is doing, check out nexusaicalls.com. That's where we track every billionaire trade and institutional move, so you can see the patterns before they become obvious to everyone else.